You're a trader, chances are you've been stuck in the loop of looking for the holy grail. The shiny indicators, signal groups, or even worse, the profitable trading bot your favorite social media trader told you about. Well, in this video, though I can't promise you a holy grail, I'm going to show you one repeatable pattern that occurs on a daily basis that you can make profits from. This pattern is easy to recognize and trade for all level of traders from new to expert, and in this video, I'm going to show you exactly how to trade it. So let's get into the video. Now, before we even talk about the pattern, we need to understand how to use the pattern for the highest win rate. Therefore, I want to talk about time frame analysis and why this will help you increase your win rate tremendously. Here we can see the higher time frame. Now, what does the higher time frame consist of? The higher time frame consists of helping you understand which way the stock's direction will move. Therefore, if it's an uptrend, downtrend, or sideways action, you'll understand exactly how the stock moves. Number two, you can create a thesis from the higher time frame. This is also very important. Before the market even opens, you'll have a clear direction and you have created a thesis based off the direction or the pattern on the higher time frame. And therefore, when the stock opens intraday, you'll be able to get the lowest risk entries. Number three, you have a clear risk target. And number four, you have a clear profit target as well. This is because with most of these patterns, they're going to be repeatable. And if they're repeatable every single time, we're going to have the same risk and the same profit factor. And therefore, for us, the higher time frame will allow us to get the most clear thesis on the chart. We need to look at the bigger picture to actually trade intraday. The reason a lot of traders fail is because they don't understand why their trade isn't working. They're only looking at the lower time frame or the time frame they're trading. That could be the 1 minute, the 5 minute, or the 10 minute. And when they stop out of the trade, they don't understand why. They think market makers are against them. In reality, they simply didn't look at the higher time frame. They don't have the bigger picture in mind, and therefore they will lose those trades. The pattern we're looking at will always be on the higher time frame. This consists of the daily, the 4-hour, and the 1-hour time frame. On any of these time frames, we want to look for the pattern. We're not looking at this pattern on the lower time frame because the break isn't significant enough for us to get in. We want the higher time frame breakouts. Now, to actually enter into the trade from the higher time frame, you need to go onto the lower time frame. And the reason for this is you'll have lower risk on the trade, you'll have a much better entry on the trade, you'll have more precision, and of course, you will have faster execution. These four things are very important because the higher time frame will just give us that direction and the thesis like I talked about. However, for the most lowest risk on the trade, we need to go on the lower time frame. This is because the lower time frame will give us more precision. If you understand how to read market structure, I have a full in-depth guide on how to read market structure on my channel, so make sure to watch that video. You will understand that even on the lower time frames, as long as you can read market structure, you'll be able to enter in at the lowest risk areas because you know the direction the stock's going to move on the higher time frame. So on the lower time frame, as long as the market trend is trending in our direction, we'll be able to enter in for the lowest risk. Now, what happens when we combine the higher time frame with the lower time frame? Well, combining both means you can create a system that allows you to enter the lowest risk, highest probability trades on the stock. This is because if the stock on the higher time frame breaks out and holds the level, there's more emphasis on the higher time frame on the chart. This is because when you look at trading, you have to think about it. Where are most institutional traders looking at? They're looking at the higher time frame. They're not scalping these trades. They're looking for the longer term moves or the bigger percentage gains for millions of dollars in capital. Therefore, unlike us, if we're on the 1 minute or 5 minute time frame, they are trading on the 4-hour, the daily, the weekly time frame. Breakout on the higher time frame means the lower time frame will trend in the same direction. And therefore, when we combine both, we will be able to catch the higher time frame trend in the direction it's going on the lower time frame to create the best risk to reward trade. Now, with this being said, let's go into what is the pattern. Okay, this pattern is so simple and easy to understand for any level of trader. However, what you need to understand is a couple context clues that will help you increase your win rate and actually use this pattern effectively to make profits trading. Now, number one, what are we looking for? On the higher time frame, which means on the 4-hour time frame or the 1-hour time frame, we're looking for higher lows and higher highs to be created. This is because we're looking for an uptrend. The stock to have its first accumulation. This means that the stock is moving to the upside. Now, of course, this is a very simple market structure pattern. I do have a full detailed video on market structure as well. However, from this uptrend, what we're looking for, the bull flag, bullish pennant, or flat top. Now, a lot of traders, this is the mistake they make, and this is where you have to listen very carefully. The overall pattern is the bullish flag. This is the most simple pattern you can trade. The pattern is not what the problem is. The pattern is repeatable, but you need to understand the context behind why the pattern works to actually make you a profitable trader. So let's talk about the context. Pattern bull flag has many different variations. We do not care about the variations. Rather, we need to understand what's happening. So, like I said, this here is the accumulation. This is when the stock is simply making higher highs and higher lows, like so. From this accumulation, what happens? If you're making a bullish flag or even a flat top, let's say something like this, what's going on here? Well, you need to understand right here, what a lot of people don't understand is they might make a lower high right here from this bull flag pattern, and this would be considered manipulation. This is because traders will go short because it simply broke that previous low. Now, what they don't understand is because this higher time frame is uptrending on the 4-hour, the lower time frame, when that breaks, they'll go short and they'll get stopped out extremely quickly because they didn't understand that there was a bull flag here. So for us, what we need to understand is, let's say there's a bull flag here, a flat top, or a bullish pennant. We're simply looking for the stock to create a new high after this consolidation and retest into any key level, which is this previous high or the bull flag high, looking for a move to the upside. Now, to draw this out in the most simple way for you to understand, the first phase, which is the uptrend on the higher time frame, is the accumulation. The second phase, where the bull flag is happening, or the flat top, is the manipulation. This is simply consolidation after a big move to the upside. You need this for the stock to continue, because the stock will only continue when it allows more buyers to enter, and buyers will enter on these lows because buyers are big hedge funds. They're simply looking for a discount in price. They're not looking at these patterns. If you understand where they're buying, these patterns will help us to enter into the distribution phase. This is when the stock moves up. And of course, you guys know I'm not a breakout trader. I'm a break and retest trader. So we're simply waiting for the retest after a guaranteed move to the upside. We're waiting for the retest so we have a high win rate. And on this pullback, we're going to buy in on the stock. Our stop loss can simply be a break below that manipulation phase, and our profit target will simply be high of day or any other key level that we had from before. This pattern alone is the reason I made $24,000 in one day on Nvidia, by understanding the higher time frame and getting my entry on the lower time frame. And I did it live and called out the trade from start to finish in front of hundreds of students. There couldn't be manipulation because I was on voice and text channels. Now, with the explanation out of the way, let's go look at a real example so you can trade this as well. All right, so here we are on Nvidia. What do we see and how can we use it to our advantage? Well, number one, you guys know on the higher time frame here, we're on the 4-hour, as you can see, we need to develop which way the stock is moving and where is the trend. Well, first thing that I noticed right off the bat is the fact that Nvidia had this previous high right here, right? This was the swing high that Nvidia had. And after the swing high, you can see that Nvidia was actually creating a downtrend. After creating this lower low and lower highs, what happens on Nvidia? Well, the first thing that I see is we actually broke back from this lower low. We came up, we broke this lower low. Now, we did not break the lower high, but we broke the lower low. So this is indicating to us that we might see a potential trend reversal. And then after that, we put in another higher low. Right? So from this low right here, we put in a higher low. So this shows that the stock may be changing its trend. After this, this is the new lower high from this specific lower high that we need to break for a move to the upside. And we can see we actually do that right here. Now, this shows that Nvidia is now in an uptrend, right? And this is simply understanding market structure of lower lows, lower highs, higher lows, higher highs. And Nvidia is now moving to the upside. Now, with this new high being placed right here, another thing I see is you guys see this previous higher low. Well, Nvidia actually came back and retested this on the higher time frame as well. Not only did Nvidia retest this previous high, and what happens when a previous high or resistance is broken, it turns into support. So not only did it do that, but at the same time, we can see that Nvidia is putting in this flag pattern right here on the 4-hour time frame. And on top of that, we can see we have the accumulation right here. And now this right here is simply manipulation, right? It's where we need to be consolidating for a little while for another push up, right? Because when a stock does, as you guys can see, when a stock does move, it does need a pullback, right? After the strong move to the upside, the stock needed a pullback for another move to the upside. However, when the stock shows that after a big move like we did right here, it actually consolidates rather than pulling back, it shows that this stock is much more likely to push new highs, retest, and make, what's it called? Distribution, right? So this level right here, or this area, would be that distribution, and this is where we want to enter in on for the highest probability trade with the lowest risk. So with this being said, how would I mark out NVIDIA? Well, for me, what I would do is on the 4-hour time frame, I'm going to mark out this NVIDIA flag pattern. This is just so you know what it needs to break to have that distribution phase. Now, on the higher time frame, we have a clear direction, which is to the upside. We have a clear thesis that NVIDIA needs to break this flag pattern, and then we're simply looking for a retest of one of our key levels. And so now we can go on the lower time frame for the most precision entry. Okay, now we're on NVIDIA on the 1-minute time frame, and what do we see? Well, for us, we're going to mark out 4 key levels. I always have 4 key levels that I always mark out, and that's going to be the previous day high, pre-market high, previous day low, and pre-market low. Now, because pre-market low in this situation is very, very low, what I'm actually going to mark out is this pre-market pivot level. This is because after this impulsive move to the upside, this is the higher low we did create for a move to the upside on pre-market itself. Now, based off of these levels, this is where we want to look for an entry. Now, for me, how would I look for an entry? Well, there's 2 possible entry criteria right off the open that I would be looking for on NVIDIA. The first entry model would simply be a break and retest, because we already broke this level pre-market. So a retest of this previous pivot point, okay, a retest of this level for a move to the upside, or I would be looking for a move above this pre-market high, a strong displacement move, and then a retest of that pre-market high, looking for, once again, high of day or key levels that we have on the higher time frame. So those are the 2 planned entries that I would be looking for right into the beginning of the day. These are very, very simple to understand. So let's play out this trade. And right off the bat, the first thing I want you to notice is the fact that this stock actually moved all the way down on the first minute candle, and it actually did hold above 921.51. So this was, once again, I said those 2 entries I was looking for. This is an entry that you could take. For me, and because I did trade this live, I'm going to show you guys the exact entries that I took. But for me, at the real time, this was a little bit too much of an impulsive and volatile move, and therefore my stop loss would have to be all the way at low of day, which was a little bit too much of a stop loss for me just because of how quick the NVIDIA contracts were. And so now my main priority was simply looking for that retest level above pre-market high, and then a retest of pre-market high, looking for those higher time frame levels. So let's keep playing out this trade. As you can see, the first thing I want you guys to notice is what happened here. Well, we actually came back, consolidated above pre-market high, retested pre-market high, and then we put in this strong candle, and then we're breaking that pre-market 927.43 level again. Now, this shows me that buyers are stepping in, and indeed with this strong lower wick on this candle right here, this wick 100% proves to me that buyers are stepping in. So how would I enter this trade, and how did I actually take this trade? So in real time, I was calling price out live on Live Voice, and it's all recorded for you to look back at in the accelerator program, where once again, I take these trades live every single day. I took a long position on this candlestick right here, with my stop loss being a close, right? A candlestick close below 921.51, with my final profit targets being up here at the 950 whole psychological number. You guys can see this is a 2.64R multiple trade. So I entered into my position here. Let's play out this trade. Now, here's one thing I want you to notice. Notice how the stock came back into near my stop loss. A lot of traders, especially new traders, would get stopped out of this trade right here because they were simply too scared to hold, or they saw it break and they want to save that money. For me, I always wait for a candlestick close below my level. I always wait for the candlestick to close, and this is because market structure does not get invalidated until that candlestick closes with the body below your level. Now, I'm going to pop up my actual executions of how how I took this trade, and you guys will be able to see in real time. This is IBKR. This is one of the most regulated brokers in the world. You guys can see my actual executions on the options contracts I was trading, and you can see I actually entered into more of a position at this candle at 951. So once we actually held this stop loss, this is the lowest risk entry for me. So of course I want to add more, because if this breaks, I simply get stopped out of the trade. However, if this works, this actually increases my risk to reward from that 2.64 original entry to almost 13.17. So therefore, I actually entered into more of a position here. And now, because I have more of an entry, I'm going to scale my first profit targets at high of day, which is at 932.18s. And then I'll scale along the way to 950.16s, because my risk to reward is also increased now. So let's keep playing out this trade. So you guys can see a little bit of consolidation here. And now we did reach that high of day level. So at this high of day level, right, I will take the 250 that I took down here. And this way I have realized profits of $1,703 on the day. And now for the rest of the contracts, I can let it ride to 950. And as you can see, we did end up reaching that 950 level. Now, of course, for me, and you guys saw it on my executions, I was scaling along the way, because scaling is very important. However, this trade still resulted in a 100% gain, right? So I was able to enter in based off of a very clear plan on the higher time frame. And from the higher time frame, I was able to develop a thesis and a plan. Once I had that plan, I executed on the lower time frame for the lowest risk, and therefore I was able to enter into this trade, which was a 2.64R trade off my first entry. And if we also combine that with my second entry, which would make it about 16.5, right? So on average, this was still about a 9R trade with all my executions put together. This means if you were to risk $100 for this trade with the exact same skills as me, you would be making $900 on this trade. So if this video helped you understand exactly how to enter these low risk, high probability trades, make sure to give it a like. If you have any questions, put in the comments down below. Make sure to follow me on Instagram and Twitter, and I'll see you guys next week with a brand new video.